now. Rofhiwa, a very good morning to you. Welcome back.
Thank
we haven't seen you in a while.
I've been hiding from the virus. I could no longer hide.
So you are free, coronavirus free.
I am.
Wonderful news, I tell you. So, globally, what can we expect? Last week, it was a bit of a bloodbath around stock markets throughout the world. What's happening this week?
It will continue, Koli, and it's going to be particularly difficult for emerging markets because it's that risk-off sentiment where no one wants to touch emerging markets like South Africa or emerging market currencies like the rand. You'll see, I think it's trading at around 17 to the US dollar and really badly against other global currencies. So this week we're going to see a roundup of the real impact of the pandemic, and we're going to be seeing more economies enact in terms of providing stimulus to their economies to perhaps buoy the effects of the coronavirus. So we're going to see central banks like ours did last week. You'll remember 100 basis points cut in the interest rates, and this is just to provide some short-term reprieve for the consumer in light of what's happening with the coronavirus. So we're going to see similar actions with the European Central Bank and other central banks this week, just so that consumers can have a bit of reprieve.
Yeah, talking about the interest rate cuts and what appears to be a trend if you look at what's happening overseas and, of course, on the continent as well. The front page of the Business Day, they're quoting the First Rand CEO saying that he expects 3 more cuts to the interest rates this year. What are your expectations? Do you think he's on the money there?
He is on the money. I mean, traditional economics calls for this. You're seeing the downturn in the global economy, and it's having a dire impact on emerging market economies, like I've mentioned. And unfortunately for the central bank, because our government is unable to stimulate the economy in any other way, unless it cuts spending by dramatic measures, it's left to the central bank to provide that economic relief. And Lesedi Kganyago, the governor of the SARB, has said on many occasions that the SARB can only do so much in terms of providing economic relief, and at this stage they're the only ones that can do that, albeit on a short to medium-term basis. So we should be seeing more cuts. It's going to provide a lot of relief for the consumers in the meantime, but it's not the best option for central banks to be taking on the economic growth story. Theirs is to monitor the currency as well as inflation.
There's talk of debt relief funds that have been set up by the Ministry of Small Business Development, and there's also talk about a payment holiday for small businesses. They employ many people, and they also, though, are taking perhaps quite a beating with this coronavirus. I'm keen to know, Rofhiwa, what we are going to see in as far as the resilience of these small businesses. And there is also another sector of the business community that is often seen as the invisible sector, and that's the informal economy. You know, hawkers on the streets. These are people who perhaps right now are feeling the immediate impact of the coronavirus.
They are, and it's going to be crucial, Kolya, and I think this is a catch-22. The relief that's going to be provided to small businesses. I know the likes of Standard Bank have come out to say we will give them a reprieve and then just extend their loan periods after the next 3 months. What's important to note here is that they won't be able to operate, which means that thousands of people are going to be retrenched. You do know that small to medium businesses in the country provide almost 90% of the employment already. The informal sector, as you've just spoken about, provides billions annually. I think it's over 6 billion, if I'm not mistaken, annually to the South African economy. And as you say, they are directly impacted by the coronavirus. They are feeling it. The problem with this, though, is that we're going to see that the government is going to be even more constrained by having to provide the relief. It's not going to be left to the private sector. Government is going to have to provide provide more social services, financial or otherwise, and this is going to put a further strain on them. And I think with what's expected, with what the President is expected to announce today in terms of those really strict measures to prevent the further spread of the coronavirus is going to have dire consequences, because the rich will be able to survive this, but those that can't go to work, those can't run their businesses, means that thousands of small businesses are going to be closed, and of course unemployment is going to increase.
It's a double whammy, isn't it? Because with more stricter measures, it therefore means a complete reversal of efforts to try and stimulate the economy, because there's no activity going on. I'll be quite interested to know whether there are going to be more banks that are going to provide payment holidays, like Standard Bank has already done. Very interesting things that are happening right now. But thank you very much for that update for the moment. Rofhiwa Madzena, our business anchor here on eNCA.